Hey there, if you follow us on our YouTube channel or on our website, you know my name is Scott Talley. I am the owner broker here at 5Market Realty, where we like to provide monthly market updates to people that follow us, people that are in the market, our past clients. So if anything in Athens area or Oconee County real estate interests you, be sure to click subscribe. You'll be updated when we have a new video on the market or maybe a new listing, property video, something like that. But today we're going to talk about what we've seen through the first 5 months of the year and going to do something a little different. If you follow me and you follow this, you know we focus very heavily on Clark County and Oconee County past 3 years to track. We're going to do a little bit of that, and then I'm going to dive into keeping current matters because I feel like this month it was a little more pertinent to talk about things on a national level and what we're seeing, kind of resetting our expectations for the home sales of 2026 and kind of what we're seeing in the market that's really more flat. But we want to go through and show you the quick stats on Clark County and Oconee, and then we'll get into that real quick. Athens, Clark, and Oconee, year to date, past 3 years, we're going to look at four main things: total listings, days on market, total homes sold, and of course, the average home sale price. Let's bring up those numbers. The news isn't bad. It's just not as good as we wanted. It's kind of flat. So you see here, we're only up year to date on listings, a little under 5%. It's good news. Would love to see that a little bit higher for buyers, but also average days on market is pretty flat. We went from 56 to 55 year to date. The market we're seeing, folks, some properties are still getting that quick move, and other properties are sitting about 60 plus days, and it's kind of an averaging out there at 55. So home sale price up only about 3.3%. And of course, we're seeing that instead of relatively flat because we do still have much higher home sales than we once did years ago pre-COVID. Total homes sold, this is the number that's a little disappointing, 4% down from last year. Now, we did see an increase in May. I'll go over that next. But while we are up on home sales in May, it's not as much as I was hoping for. So we're going to look at just the month of May right now. You can see the total new listings was down about 11%. The days on market was up 13.7% from last year's May. And the average home sale price was up 9.5%. So a lot of the pricier home sale values in the last month. And we did see more homes sold in May at 179 compared to 159 last year. It's up 11%. The news is good. We were just hoping to get over that 200 number, and we didn't get there. Two things to note. The listings are starting to slow down a little bit. So we're in June, and now we're starting to see the listings go down when compared to last year. And then the days on market, if you compare this same time last year, that's almost 14% up. You're a home seller and your home's not flying off the market. That's what we're seeing. Some cases they are, but in most cases, it's taking a little bit of time to find that buyer. Also, we're going to look here at just the total amount of homes on the market. This is of today, June 10th, 499 Clark and Oconee County. A year ago, it was 477, and that's only about 4.4% above last June. So we're kind of seeing this normalizing market. We're kind of seeing things stabilize. They're starting to behave the same way, and that's because home values are slowing down and interest rates are remaining where they are, a slight uptick this year. Now, I want to kind of go over some things from Keeping Current Matters. So follow me with the rest of this. This is going to be more national news, and I thought it would be a little bit more pertinent because what we're seeing sometimes in the market right now is home sellers overpricing still and not pricing correctly. And, we've talked about it before. You might not get a grand slam, but you still might get a 2 or 3 run homer on your home sale. So try to think of it in those terms. And will the market pick up? This is a quote from Ben Ayers, a senior economist at Nationwide. Many homes on the market are lingering due to the lack of buyer interest. This speaks to the deep affordability issues for potential buyers, which have been exacerbated by the recent spike in mortgage rates. Until mortgage rates ease, most first-time home buyers will continue to view home ownership as cost prohibitive compared to renting. This is what we're kind of looking at, the housing forecast. I'll move my head a little bit, revised, and what we're seeing. So this is saying what they were predicting. They were going to see an existing home sales increase in 14%. And the source here is NAR, the National Association of Realtors. They're now saying that's going to go down about 4% to a 10% increase. New home sales is going to be flat. They thought we might see an uptick 5%. They're thinking that's going to be relatively flat. The home price, they're predicting a 4% gain. I can see that, but I might think locally we're going to trend closer to that 3% range that we just saw on the other slide. Rates being up from 6% to 6.5%. Net job gains, they were predicting 800,000. Now they're saying 400,000, and the unemployment rate going down slightly. Let's kind of go to this next one from the chief economist at NAR. Mortgage rates have been rising, and that has led us to trim our home sales outlook for the year. Even with a more modest pace of sales growth, home prices continue to steadily increase due to minimal inventory. So we are seeing the increase in home sales, but we're seeing less than what we were hoping for. Let's move here to these forecasts that have been adjusted. So this is the average total home sale forecast was 5.2 million. Now we're at 4.9. Let's break this down by existing home sales is going from 4.5 million to 4.2. What that means is not new construction and existing home selling. And we'll get to that new construction here that was forecasted at 720 to 680. Now, this sounds a little like bad news, but keep in mind, we're saying 680,000 sales. We're saying over almost 5 million sales, but just not as much as they were hoping for. So the year, we're kind of resetting our expectations based on everything that's happening. Come in here, home prices, which markets are growing and which are not. So one thing we're noticing across the nation is some markets are still seeing aggressive price growth, while others are actually seeing prices come down. Prices are rising, not falling, because new listings of homes for sale are declining. There are still hundreds of thousands more home sellers than buyers in the market, but now some homeowners are opting to stay put rather than list their home in a softer market. That news is from Redfin. And then home price growth has been slowing every month for the past 12 months, with the exception of October 2025. In February, more than half of the major U.S. metros posted year-over-year price declines. Home price growth at national level has stalled, and that is from chief economist at Bright MLS. Now, using this as an analogy, talking about home price growth, this is just a speedometer showing you 80 miles an hour, a little over 80. What happens when you get going too fast or you get caught, you don't slow down in a school zone, you're going to get pulled over, you're going to be told to slow it down. And that's kind of what we're seeing. I think I've shown this one before, but this is the percent change in home prices year over year, dating back to January 2022. So on this side of my head here, you can see still kind of in COVID, 20% appreciation gains, which was just really fast, going too fast to sustain. As we come down here, you can see that this has been flattening out since, let's call it March 2025. And if I were to go back before COVID, you would see these home prices appreciating at maybe a little bit better, maybe 5 to 7%, but we were not supposed to sustain the 20% growth that we saw during COVID. Why is home price growth so slow right now? Well, inventory supply has been rising for about 4 straight years. Buyer demand has been relatively limited to the affordability issue and some economic uncertainty out there. And there are regional differences in the inventory gain. So what's happening in Texas is not the same that's happening in the Northeast. Let's look here at the inventory for the 4 straight years. Pre-COVID, this side of my head, if you follow me here, you're looking at 1.2, 1.1, 1.1, 2017, 2018. That's inventory. We got so low below my head here. I've gone over it numerous times. And then now we are returning to a more normal level. So we're kind of in this balancing out in our market right now. And that's really what we're seeing is a balance between buyers and sellers. We've talked about it a good bit. Now, let me move my head here. This is kind of showing you where the price declines are in the red under my head and where price appreciation is happening over here to the other side on green. You can see 5% in Milwaukee, Wisconsin, Hartford, Connecticut, Buffalo, New York. Then come to where my head is. Over here, you've got Austin, Texas is seeing like a 6% decline. Dallas, Texas, Tampa, Florida, Orlando, Florida. And then Atlanta, Georgia is right here at about 2%. So based on where you are in the country, the inventory levels are changing the market. It's not really the same nationwide. It's a very localized market right now. And we've got here another quote from CEO of Resi Club. Home prices are still climbing a little year over year in many regions, where active inventory remains well below pre-pandemic 2019 levels, such as pockets of the Northeast and Midwest. In contrast, some pockets in states like Texas, Florida, and Colorado, where active inventory exceeds pre-pandemic 2019 levels by a solid clip, are seeing modest home price pullbacks. Did you hear we said they're exceeding the inventory that was pre-COVID? In those markets, that's where we're seeing the prices pull back the most. This is a map kind of showing you where this is happening. So let's first draw our attention to Georgia. So this is dating the market shift comparing 2019 to 26. 17 states are back above 2019 inventory levels. Georgia's close. We're about 3.6% behind 2019. So if we saw an inventory boost, we would kind of change our market. But these other places like Florida, that's 18.9%, Texas above 32%, Colorado at 37%. So that's why those markets are seeing the prices pull back a little bit more than we're seeing in states like Georgia. Price changes follow the inventory changes. So now we're just looking at the price change. Georgia, we're right here. We're almost completely flat, which is what we're seeing in the Athens market. We're not seeing really a downward. We're just seeing a very flat growth. But you can see because of those inventory changes, Texas is at 1.6, Colorado at 2.4, and that's where the inventory is the highest right now. So what did I talk about earlier? One of the reasons I want to focus on this is sellers with realistic expectations of the price. The market's tricky right now. We see some properties that multiple buyers want, and they do a little better. But that's a lot more rare than it used to be. Most properties need to be priced correctly, and you need to set your expectation of time on the market. Pricing strategy is becoming critical for listings this spring. Homes that are priced competitively and presented well are still drawing strong interest this spring, including multiple offers, sometimes above asking price. That's from NAR. Listing this morning, one of our agents got multiple offers on, and it's a little bit more in that affordability range, and that happened just this morning. But overall, we are seeing a balance between buyers and sellers. Now, we want to kind of comment on why are people moving right now if these interest rates have been so low. Well, people move because of life changes. I mean, looking here, NAR, 7 million births in the last 2-year span, 7 million people turning 65, 4 million people dying, 3 million marriages, and 1.5 million divorces. Those are reasons that people are in the market selling or buying. Major life changes. That's factors that cause people to move. Household member's death, a job change, downsize to a smaller house, change of neighborhood, want a larger home. These are why we're still seeing those sales. Even though I said the expectations are down, it doesn't mean transactions aren't happening. We're still seeing plenty of transactions, just not as much as we had hoped for. I'm going to skip this one and go move a little forward to kind of running a little long on time here. One of the things I want to talk about is the real thing in the market. There are going to be more foreclosures. We've covered that in our last update, but we're not going to see an amount of foreclosures to reset the market. 50+% have an interest rate of less than 3.9%. Only 6% have a rate, only 21%, almost 22, have a rate above 6%. And 27% have a rate from 4.5% to 6%. So there's a lot of people in a good equity position, and that's one of the things we're going to cover next. I'm going to go right here to this slide. These are the numbers I want you to pay attention to. 48, 34, and 14. Got them highlighted there. These represent 48 trillion, 34 trillion, and 14 trillion. The numbers are in the trillion. 48 trillion is the total value of the market. 34 trillion is the total home equity in the market. And 14 trillion is the total mortgage debt. That is the most mortgage debt we've ever seen, but we've also had the highest equity we've ever seen. So there doesn't seem to be a trend that's going to get this market reset. We're probably going to see prices flatten out in most areas, or in some areas where the inventory goes up, we're going to see a slight drawback in that over 3% number. Places like Texas, Florida, Colorado, we could see that. Finishing this slide, the green bar shows you what I just talked about. The total real estate value, which is right there at 48 trillion. We've got the total home equity, which is at 34 trillion, and then the 14 trillion of mortgage debt. You can see the separation in those lines. There's a lot of equity out there. So the values, there doesn't seem to be a trend that we can see right now that's going to be a flood of foreclosures or anything like that. This is our office building. We kind of went away from the group photo for a little bit. Thank you for staying with me for over 12 minutes. I wanted to really talk about national market news. Thank you. If you're in the market and you need help, info at 5M Realty. This is our office building right here on the corner of Millage and Cloverhurst. 5mrealty.com. Be sure to click subscribe. We have people that can help you. And in this market, you need to be listening to the professional that lives and breathes this every day, not ChatGPT, not Zestimate, not Zillow, not Realtor.com, the person in your market that sees what's happening on the ground level. Have a great June. Hope your summer's off to a good start. Again, thanks for sticking with me for the long market update today.